So the one concept that I use, or the one understanding of my system that I use to properly determine my directional bias, and I reckon it will help solve all of your problems, or the majority of your problems where determining directional bias is concerned. This is how I actually frame my trade ideas. The whole how I would do this video will be tons of screenshots, just tons of screenshots from case studies, and I will just be running through it because as we go on, you can find a consistency in the approach used to determine directional bias. This is the first step in the overall framework. So if you focus on this first screenshot, for example, if you start from the bottom, the first question is what do we see first? And we can kind of answer it. We see the liquidity sweep, this low being cleared, so the liquidity sweep, and then having a clear switch in order flow, showing signs that price is likely to switch bullish, or order flow is likely to switch bullish. And then we got the confirmation, the bullish order flow intent, the moment price, oh, you can see my cursor, but the moment price broke through this area another time. So the first break will be the switch in order flow, and the second break will more or less fit into my understanding of those theory of continuation. So as I got here, once we got the second, or we got the switch in order flow, then the second break, quote unquote continuation, then the trade idea has been validated. This going into like the second step, so I wouldn't touch on that much further. But is simple. The approach is well simple. Looking at what you're seeing first, or trying to frame like a proper idea based on the information that's presented to you already by the market. So you got the liquidity sweep leading to a switch in order flow, subsequently leading to a continuation happening. So it speaks to the fact that you know what, we're likely to continue bullish order flow. So that's how the trade day was framed for this specific trade, or this specific day, I should say. Simple step process, simple steps. But we move on to the second one. This one's like from shorts now, and I have this note. This was one of the clearer, more straightforward approaches my system allows for. Whereas a situation where you're looking at what you're seeing first, you're seeing like you just pan out, or you start from here. You can see a high form, but a high get cleared, but it creates a new low, and then all of a sudden the price is just range bound until we get like a final sweep. And I reckon this was subsequent to FOMC, I think. But we get subsequent sweep of a high, and then we proceed to clear this order flow range liquidity low, which was interesting in itself. So all of a sudden we got a couple things happening. One, the sweep, liquidity sweep. Two, like a switch in order flow, and three, the order flow range liquidity being cleared. So it's kind of putting in the idea this second box here, the shorts from well positioned the order flow range target order flow range liquidity low, and this is going deeper into the system. But I mean, to frame the idea, we could focus on this lower box. The trade was framed based on the most recent development of order flow as regarded. So once you see price play with this high in regards to sweeping it, and then proceeds to actually clear the order flow range liquidity low, then it speaks to me that you know what, we are likely to head bearish. We are likely to head bearish based on how order flow is switched, and based on how order flow is printing, if that makes sense. And then it kind of went on a bit here. So much that when we get these clean breaks, so referring to this especially, it speaks to the simplicity involved in constructing the actual trade idea. Clean breaks is what we always looking for. Clean breaks and clear sign that shows that you know what, it's time for us to switch, or it's time for us to play according to what the market is telling us in regards to order flow and how we frame the perspective trade idea. If we move on to the third one, this in itself is a bit interesting, but confirmation that we're indeed operating within bullish order flow. Where is the confirmation? It lies within that the question like at the start of the video. What do we see happening? What we can see, if you just zoom out, or just shut your eyes, or just close off your brain for a moment and just look and see what is actually happening. I can see a high being cleared, and I can see a high being created. So the idea is that you know what? If we clear a high, and then we proceeding to clear like intermediary highs, respecting lows, then it speaks to the fact that you know we could be operating within bullish conditions. But these bullish conditions or the bullish order flow conditions are more or less continuations from the initial switch in order flow, and that would be much lower, but I probably don't have a screenshot for this one, for the much lower part. But I go on to ask the question, what, with this being established, so the confirmation that you're operating within bullish order flow, what's the idea? Simple, to continue playing as order flow warrants. So if we got on an understanding or establishment that order flow is actually bullish, then the idea is to play in accordance to what the order flow warranting. Now it's just about confirming the actual range, so we have an idea as to where we are getting involved from. This is coming to the second step about involvement. But you can see frame traded is as calm as ever, to be honest. Is as calm as ever. And I usually frame my trade ideas during my pre-session analysis. So like an hour to 30 minutes before my session opens. Or yeah, my personal session opens. That's when I would conduct my pre-session analysis. And this is how I go about framing the idea, looking and see what's happening and trying to make it make sense. Not me imposing my beliefs on the market or my beliefs on how price may deliver, but instead me just taking the information and putting it into like a framework that I already use, so much that it becomes aligned with the actual model. So I step back, take a step back from being trader, whoever it is, take what the information from the market is giving and place it into your frameworks in regards to the system. So if you got a system that says do 3, 4, 5, make sure you got instances where the information telling you that 3, 4, 5 could be applied. So much so you don't go ahead and apply 4, 5, 6 or 6, 7, 8, like whatever. Make sure it's always in alignment with your actual system. Now if we kind of move on to this next one, you can see something very interesting happening. And before I kind of go in to explain what's happening here, just take a moment to pause the video. Yeah, just take a moment to pause the video and just try to make sense of it. Make sense of it in how I regard framing a trade idea. Yeah, most of it could kind of move on now. Most of it could kind of move on. But remember, it's all playing into a few things. But first, if we just take a look at this first box, this first text box, right? You can see it says the order flow range liquidity high. So if you see OFRL-H, it just means order flow range liquidity high. It gives me the real clue where the directional bias is concerned. So I see a high created. I see a lot of things happening actually. I see a high created and I see a low form. But I see all these intermediary lows form. So it suits me that, you know what, it's time for me to start thinking and trying to establish what we're really doing. But say for example we just cut off anything after the mitigation, anything after this 75% box was hit, we just cut that off. Just forget about it for now. We can see the range being created. How we know the range is being created or the range is valid? The mere fact that we have a reverse switch in order flow confirming the range high and the supporting liquidation, which confirms the range low. So we know for certain from this point and the sweep as well. This is something you could take into consideration also. But the sweep as well, what we can see here, the low in place and the high in place. And it speaks to the fact that, you know what, if my methodology is correct or not correct, but if my methodology is valid or logical, so to speak, or that it fits in accordance or fits in congruence with the data that I've collected, it speaks to me that, you know what, we can mitigate 75% at least prior to actually running the order flow range liquidity high. That is indeed the motive. That is indeed the motive. But then we kind of move on to this second box, which is more or less filled with information. It's more or less filled with information. So if you just kind of take a look at it, take a look at more or less diving into it currently, you can see a few things. Notice where the supporting liquidations are situated. So we coming in to say like this part of price now. I think I was just a note myself, which is interesting. But always below the 50% of the order flow range for longs and always above the 50% of the order flow range for shorts. Just playing along with the idea of operating in premium and discount in regards to positioning. But this kind of plays into how I actually frame trade ideas as well. Like me knowing or me having the idea that, you know what, it's likely that this order flow range liquidity high is going to be cleared. So it means that my position will be longs. And where would I like to be positioned long from? Within or below 50% of the order flow range. Clues to make your unique plan, your unique trading plan lucid. This kind of tying into like a different video topic that I have planned as well. But it would all make sense as we move forward. Once you get this first step down in regards to framing the trade idea, hashtag directional bias, then it would all make sense going forward. Now, pay close attention to how I have like these sweeps and these support and liquidations. Yeah, just sweep, support, and liquidations. In this case, the sweep and support and liquidation are kind of like ambiguous because the use case kind of like similar, right? But yeah, but what he's saying, in certain instances, or I hope from the last 3 or 4 like screenshots and explanations, you will kind of see how I go about framing trade ideas or the components used to frame trade ideas. Taking information as it comes, having like what's the word? Having like an idea as to where price is likely to head to based on market information. So, say for example, let's see this sweep, and then let's see the switching order flow happening right here. The moment this side goes, I regard the switching order flow, and then I get a continuation. The moment this second high, this second break happens, then it speaks to me that, you know what, we're going long, or long is the motive. So I just play it in accordance with that. I hope that makes sense. If it doesn't, feel free to leave a question. I leave a comment with a question, or message me on Twitter or wherever you find to message me any means. Just send me the message and I'll free to explain. Now we're kind of moving into like a next section now. The next set where I have like a little framework use for framing the trade idea. And following the already established sequence of events, the order flow mitigation, the support and liquidation, the switching order flow, keynote implying the secondary route. This playing into the second step, which is interesting. But if you just forget like the last part and remember the first three, the already established sequence of events. So when we got instances where, how was explaining in the last screenshot, where we get a sweep, we get a switch in order flow, then we get confirmation from the second break, and overall we get validification of a range, or the validation of a range. Whereas like, you know, you have your reverse switch in order flow, and you know you have your support and liquidation. Let's see if any of these other screenshots will have examples. I will have to go and draw it on, but you will get to see. But I mean, like, these sequence of events already put in place would allow you to properly understand or properly go about determining directional bias. When you could take information that the market gives and stack it on top of each other. Oftentimes you will hear it regarded as like building a story. Oftentimes you will hear it regarded as building a story. It's very interesting. But take information as is already presented from the charts, from the markets, and go ahead and apply your framework to it, or apply them little components in your system, them little concepts that you use to get it done properly, or to go about framing a proper idea. So the reason why I was keen on longs is because these sequence of events have already been established, whereas I have the flow mitigation. I mostly got a sweep, I mostly got a support and liquidation, and I mostly have a switching order flow. So already the idea for longs is already framed for me, and I most likely have a target. Most likely have a target. But we move to the next one. And this kind of playing into how we move forward. And I guess this will be following there or something. But playing the continuations for longs as per the order flow. So we get a switching order flow happening right here, and we get a continuation happening the moment this high goes. So all of a sudden, we're kind of stacking now. We got sweeps happening, we got the order flow mitigation happening, switching order flow, continuation, that's showing you that yes, we're just playing long, we're just playing with bullish order flow, and we got somewhere to target. So very tangible, so to speak. We got a target set in place. So now, like, just frame me the idea. I know for certain, look, I likely to play longs based on the already established sequence of events. All them little points that we touched on for the last couple of screenshots are for this all the screenshots up to this point. We just use them to stack, and use them to add more weight in determining directional bias or framing the trade idea. But this is, I can get into this in another video, but where is the order flow range low formed? It's like in these cases, this is crap. But in these cases where it's kind of unclear, then they tend to just use the origin, especially in cases where it had like a mitigation already happening. I just tend to use the origin when we break multiple times. But we can get into that in the next video, indeed, soon, very soon. But we move on to the next one. We can see situation happening, very calm. What's the overarching idea? We could clearly see happening based on prices development currently. Bearish order flows, yeah? Or bearish order flow ranges, yeah? Whereas, like, you got switching order flow, you got the continuation happening, and then you just got fulfillment, further fulfillment, so on and so forth. Ideal positioning comes into the second step in the framework. As I say, touch a video on it as well. How you actually get it involved. We can see the idea or the not idea, yeah, framing the idea is coming together, is piecing together, where you just take information as presented by the market and make reasonings or applications to it, so much that it becomes much easier for you to go ahead and frame a trade idea or determine like a directional bias, where you wouldn't say, oh, this might be a switching order flow to go higher. So that means, oh, we're playing within bullish order flow ranges. So that means I can be targeting highs. No, it certainly does not speak to it. Once you take the information that's already presented and align it with your actual model, or align it with the components that I've already listed so far, or those little touch points that I've already listed so far. So you move on to the next one. We move on to the next one, and what do we see? That's the first question that you could ask. What do we see? Most recent break. And what does this most recent break confirm? Remember, if you get a mitigation of a zone, we have a sweep, then we get the switching order flow, and then we more or less got continuation the moment this second break happens. Regardless of the second break, for example, it confirms that bullish order flow is in place, right? Or hopefully it confirms that bullish order flow is in place. When we see these sequence of events more or less playing, when we see these sequence of events already just playing out, we could just step back, take information as presented, so that we could begin to formulate ideas or frame the idea, determine directional bias. Yeah, this all is more or less playing into like the other steps. But I can still go ahead and probably explain this one a bit. This one specifically, where's the new order flow range that we're operating with from or operating within? Follow the same video that I have in regards to order flow ranges, and you would know which one's the proper order flow range that you could play within. Where could we possibly trade towards once the range has been confirmed? It's playing into the entry. But as I say, it gets interesting the moment I drop the other videos. But this one follows the same approach, or the same idea of framing the trade idea, or determining directional bias. I guess this will be getting a bit repetitive right now, to be honest, because it's the same exact same like simple framework that I use every single time. Mitigation, sweep, switching order flow. It's interesting because we didn't have a confirmation for this one, so this is a bit of nuance playing it. But once we establish that yes, this order flow range liquidity high is likely to be is likely to be targeted, then you know for certain once they mitigate at least 75% of the order flow range, it doesn't matter waiting for confirmation to play higher. So much that these questions are asked: where do we mitigate? Where are we heading? What do we see? What must we see before getting to the destination? And is there directional bias? It's like, do I know where you're likely to play towards? Like all these questions you could ask or frame to yourself in order to make a good decision, so to speak. Or not just make a good decision, but actually frame, yeah, but actually frame a trade idea properly. Or go about framing a trade idea properly. Go about determining your directional bias properly. All right. So now we move and go on, because this is playing into the other steps as well. We move and go on to the third section. Same thing over and over and over again. The first step lies within determining the directional bias. If you don't know what you're really looking for, or were you looking to trade towards, then it gets more annoying in regards to framing proper trade ideas, where you could find yourself on the wrong side of the market, for example. But it goes back. What do we do? Yeah, it goes back. What do we do to frame a trade idea? How do we determine directional bias? Take information as given by the market. So what I can see happening, I can see a sweep happening. I can see the switching order flow happening, and I can see like these internal, what's the word? Like these internal breaks, but I'm not focused on those internal breaks currently. I just wait for something that's more distinguished or more distinct to form in order to say that you know what, this is in my continuation. So once I got this high going, then I know for certain that this is a valid idea being framed, a valid idea for longs being framed. Switching order flow, well no, the sweep, the switching order flow, and then the continuation. So I know for certain that yes, it goes into the second step, which should be how you get it involved, and that plays into the validification or validifying the actual order flow ranges. As they got like in this little note here, and understanding where's the order flow we're playing within. So like where's the actual order flow we're playing within, going into the second step, and then once determined, it makes the following components much easier to execute. So the step 2, step 3, and step 4 make them easy to execute on. Whereas like I know how I can get involved, I know where I can entry, where I can enter from, and I know where I can exit. But it all stems from having a proper directional bias, having a proper idea being framed. So we move. As I say, the same thing. This is interesting because this was from the last one, from like 2 or 3 ago. But this the same thing being understood here. Whereas like, what is the order flow range that we're operating within? Where is the order flow range liquidity low, and where is the order flow range liquidity high? Like just ask a lot of questions. That's one thing you could do. Ask a lot of questions, so much so that you could gather so much information. So what we'll most likely do is, if you're, yeah, I could probably just give like a template or like a framework you could use to ask questions that will ask probing questions. What do you mean by probing? Those questions that would draw information, draw tons of information that will make it much easier for you to frame ideas or determine directional biases. Right? So what happening? Where do we mitigate? 75% order flow range. Where are we heading? To the order flow range liquidity high. Then I should put this as a little disclaimer. Because you think price is heading somewhere, it does not always mean, it certainly does not always mean that price will head there. Obviously, if you got data that's supporting the idea, then you know with a degree of certainty, whether that be 80% of the time or 90% of the time or 70% of the time, that once you see these sequence of events happening, you are more inclined, or price is more inclined to move towards a specific area. But it does not mean that it will always happen. That's a huge realization that I've had over the past 3 years that I've been trading. If you say price is going to this order flow range liquidity high, it does not mean price is just going to go to that order flow range liquidity high. Obviously, I data to support the idea, or data to give me like a probabilistic thought in regards to how probable or valid the idea is that we might go to this high, but it does not mean that will happen. But go back, ask a lot of probing questions. Ask a lot of probing questions. We can see here what happening. Mitigation, we likely to head toward this high. We had like a switch in order flow. We get further confirmation. Yeah, we get further confirmation that the range is actually being formed. or the bullish framework is already in motion, and we know for certain that the range is established. We move to the next one. We move to the next one. So this is where it gets a bit interesting because we get fulfillment from the last order flow range. We get fulfillment where the directional bias are framing the idea longs was more or less valid. So based on the understanding, based on the walkthrough, we know that longs were the case, or longs were most likely the case, or the intention, I should say. So the objective was met. So we evaluate the current market's delivery to aid in determining directional bias or framing of the following traded day, right? So from here, we're operating under the idea that the directional bias will facilitate shorts. Why would it facilitate shorts? Ask a lot of questions. What has happened? Clear a high. So the objective met. So we clear this high. So this order flow range liquidity high being cleared could easily be regarded as a sweep. But it's all down to interpretation to a certain extent, or perception to a certain extent. But we can see here the order flow range liquidity high cleared. Second step, switching order flow. Where did it happen? The moment we play towards this low. If you want to get more general, you could just use this low. But the moment this low goes, then it speaks to me that order flow is beginning to switch bearish to frame the short idea and make the short idea much more tangible, so to speak. And then the next step would be more or less validating the idea. So it's what happening next, the confirmation. So the moment, yeah, we get the first break, or regardless of the first break, let me just regard it as the first break for simplicity. So we just take this as the first break. The moment this low goes, then it speaks to us that, you know what, it's very interesting, because this could be the continuation as per the framework that would allow us to think, you know what, the idea is frame for shorts. And the targets, where are we likely to trade towards these lows? And this kind of playing into a video that I have planned as well, how once the objective is met from a previous order flow range, then the order flow range lows are function as like liquidity targets the moment we switch order flow. And we could kind of see the fulfillment happening here, but there's much deeper much deeper explanation as to what's really going on. So yeah, this is common itself, to be honest. This is common itself. Like obviously we got trees in here and all sorts, but I will play into some videos I got planned for the future. But you can see the idea being framed, or directional bias being determined based on asking a few questions, asking those probing questions to gather information or to extract information. So we move on. I hope that you're following. I hope that you're gathering tons of insight, gathering tons of value. So we move on to the next one. It's interesting because it's the same thing over and over again. The traded day has already been formed. How do I know? Order flow mitigation, order flow area mitigation, and not supporting, you switch in order flow. And you understand where you're likely to target. Positioning, sequence of events, way too calm. And this ties into like the second step onwards about waiting for confirmation, or how you're getting involved with the entry and the exit. But very simple indeed. Very simple indeed. So we move on to the next one. Still playing shorts considering the bearish order flow delivery. So remember, sequence of events. What has happened before? Obviously, I don't got a screenshot, but what happened before? I should probably do some live charts, but still playing shorts based on what happened before. So most likely we will have it here, a sweep happening, an objective being met, a switch in order flow, and confirmation. And we just play along. This more or less tying into like 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 a second variation, or yeah, like another variation of how price could deliver, because we could be in a stage where it could be like continuations, kind of like here, where it's like you already switched from the top and you're just moving downwards, or we could be in a case where you're mitigating a previous area and you're now beginning to show signs that you're switching order flow, that you're likely to move in the opposite direction. And we can see it happening here. Playing the continuing shorts or continuation shorts to where framing the idea related to target. Mostly is our flow range liquidity low. The idea is already framed, so now what do we do? Plays on to the second, third, and fourth steps. But we can see the idea being framed, or a short idea being framed based on what the information we extract. So what happening before, what happening now? We could, even if you don't know what happened before, we can see a sweep happening. We can see a switch in order flow happening, and then we can see a proper break happening, signaling that continuations are in play. Or if you don't see this as like a switch in order flow break, actually going to explain that, but if you don't see this as a switch in order flow break, but just instead use this low being more generalistic, then use this as a confirmation that lows are being targeted next, or the order flow as in these switched bearish. And if you just move on to the second, well, the last section actually, the last section, we could get a bit more clarity, or kind of like wrap up this video on a whole. Right. So now getting into it. Same thing over and over and over again. What frames the trade idea? Information or development, sequence of events that happened before, already established sequence of events, mitigations, sweeps, switches in order flow, continuations that showing you that order flow is already in place. So it speaks to the fact, you know what, wait, we got 1, 2, 3, 4 happening. So it speaks to me that my idea already framed. If I got the mitigation happening, a sweep happening, the switch in order flow happening, the confirmation of the continuations happening. So now it's like, wait, I already got more or less the code cracked, or the framework has been fulfilled. So now it goes on to the next steps, the step 2, the step 3, and the step 4. But we move. Bullish intention, so the motive remains long until proven otherwise. This is something that I hold in high regard. Remaining in a specific, or holding, I don't want to say holding because that's a funny word, but keeping in a specific mental framework in regards to determining directional bias, or having like a trade idea being formed until you're proven otherwise. So when all of a sudden I realizing, wait, this comes into range verification. When I come to realize, wait, my range became invalid, or it gets invalidated, then I could go ahead and switch the trade idea, or switch the directional bias. We move next. Yeah, this is mad interesting on its own. This is mad interesting on its own. Let us indeed get into it. So I have this arrow, or this box. Here we see a switch in order flow. The moment our previous order flow failed to fulfill its purpose. So this is kind of playing into the way I said just now about playing in one direction, or keeping one direction until proven otherwise. The moment my order flow range has been invalidated, then I could say, you know what, bullish order flow is in play. Are we likely to switch the directional bias from bullish to bearish? Right here, what's interesting is that once you've invalidated the previous order flow range, new order flow range is created in the process. Something I can touch on in a subsequent video, because this one probably gone over 30 minutes, which is crack. But subsequently framing the idea for bearish order flow ranges, and by extension shorts to play. So once we see certain things happening, once we take the information that's given by the market and more or less use it properly, fit it towards your system, align it with your system, make it congruent with your system or your framework, then framing the trade idea, or solving this clue about directional bias, it gets so much easier. Because they know that once the previous order flow range gets invalid, then the next thing that happens is that a new one get valid, and a new one under a different directional bias. So it's like, if longs fail, play shorts. I know it sounds kind of simple and like straightforward, but in actuality it is. But this is an amazing use case for deciding 3% order flow area where the idea is to confirm the actual trade day following a switch in the overall order flow. So this switch in the overall order flow, signaling to the switches in directional bias, are no framing the idea that we need to play short. And as I said, like this becoming like a main focus though, playing to where's the targets or where you're likely to head to. That's another way. If you just look at markets in general, that's another way you could say, you know what, this is how we can determine the order flow, directional bias, looking to see where price likely to go to based on what happened before. We move, we move, we move, we move, we move, we move, we move. And now we just go into like the last three now. Look at what happened from before. You see a logo, we see high sweat, we see order flow switch, and we see order flow ranges being continued, or the order flow ranges carrying or holding. But remember, take the information is already given. If I had like just a blank chart, I will show you how I actually do it. But take information that's already given and form a thesis. Extract the information, align it with your model or align it with your framework, and just allow price to do its thing. And this is how you actually get detachment from being in the trade as well. Whereas like you know for certain there's a thought process behind it. The thought process is backed by data or backed by experience. You know for certain why you playing in a specific area based on your framework or based on sequence of events, already established sequence of events. So it just makes it a lot easier for you to say, you know what, when my entry model is met as you go forward, I don't care just shutting off my charts and leaving it as is. Shutting off my charts, setting alerts and leaving it as is. Because that's the confidence that you will get. That's the confidence you will begin to develop, so to speak. But we move on. Already seen a breakdown in price as was already signaled from prices development during the month so far. So what was happening from before, signaling to the fact that, you know what, we just moving lower, we just moving lower. So the idea is more or less framed at that stage. Then we get the order flow area mitigation to further frame the prospective trade day shorts. So we kind of stacking on top of stacking on top, stacking on top, stacking on top. But we got this mitigation happening, and then if you just move over a bit, you can see the switch in order flow happening, and then you like continue new range high created. So we're referring to this. So the question is, where's the range low confirmation? And in the previous video about order flow ranges, you can see how we validate this as a range to play from. And this is huge. We wait. We wait, we wait, we wait. It's way too calm. But can I think like in this top one, you can't overlook the mitigation plus the switch in order flow, which confirms where the range is likely to be, or kind of saying, you know what, this is most likely a range high being set in place. And I got here with a high degree of certainty at least. This is based on data. Based on data, my experience indeed. Let me move on to the penultimate one. Way too calm, man. Way too calm. Coming into the session, what do we find? So it's like this is like a great start. If you want, like, you just get on charts. First question you should ask yourself: what is happening? What do I see, or what do I understand to be happening? Clear bullish order flow as regarding in relation to my methodology. What I mean by this, I can see sweeps happening. I can see switches in order flow happening. I can see highs being cleared, and I can see highs being confirmed. Well, bullish order flow ranges are being confirmed the moment that you clear it more than once, or in steady succession, I should say. And I got this next question. So what do we do? Play in alignment with the already established order flow ranges, and this tying into the next steps. So section 2, 3, 4 in regards to the system overall. This as well. This as well. Let's play into the next one. But the main part here in this screenshot will be this first question and third question. Coming into the session, what do we find? And when we get an understanding of what we find, what we can do, or what we are going to do. What are we going to do? It's way too calm, man. It's way too calm. Way too calm indeed. And then the last one. last one. Leave the hardest for last. I didn't even know I had this in my last one, but we move 40 minutes. Whoa. As for framing the idea, I saw price switching order flow as I know it from bullish to bearish once liquidity was swept. Once the liquidity was swept, I realized that, yep, you're going from bullish order flow to bearish order flow. Sweep happened, switching in order flow happened. And once you get this switching order flow along with like the low confirmation, then we can see that this low is most likely going, that low is most likely going. But why we have a short frame as opposed to a long frame? Simple. As for my methodology and ideology in trading, the moment a previous order flow range fails to fulfill its purpose in regards to targeting like this high, order flow range liquidity, then it in turn becomes the target order flow range liquidity. So say for example, I had from this low to this high as like a range. Right, let me get a bit more granular. This low to this high as a range. The moment this low fails, it speaks to me that this low can fail, and any low that's kind of a bit lower can fail as well. Plus, I play out of flow ranges in its immediate state. More as this is time passing. Indeed, it's coming into like a following video. I got tons of video planned, but this was the last one, the last screenshot, and I hope you get an understanding of how I actually go about framing trade ideas and determining proper directional biases. Playing with information that's already presented, playing with targets based on the information that's already presented is it could get as simple as that, to be honest. Where you see 1, 2, 3, 4 happening with the anticipation that 5 can happen based on data. So it's your job to figure out how does 1, 2, 3, 4 align with your framework, your system that will allow 5 to happen. If you don't use numbers and just use words now, if you see a mitigation happen followed by a switching order flow, mitigation followed by a sweep, switching order flow, confirmation of the actual order flow range being valid in regards to directional bias, framing the idea, and they know with a high degree of certainty that once they have an order flow range liquidity high or low being created as a target, then they could go ahead and say, you know what, the idea is already framed. I know what happened before, and it will allow me to understand or allow me to position myself in such a way that it could play towards what I anticipate is going to happen, or what I think based on my data and based on my experience what is going to happen next in regards to targets. If you found this video helpful, I implore you to go ahead and leave a like, consider subscribing. Keep it calm. Keep it calm. Keep it way too calm, because it's way too calm indeed. I hope these 40 to 45 minutes were very valuable. If it was valuable and you would like to learn much more and benefit from the live training sessions along with more methodology sessions, then just click the first link in the description. Get a free trial. Even if you don't end up paying, and you can cancel at any time, get the free trial, see what it's really about, see how I navigate markets, and see how the guys in the group actually go ahead and navigate in markets as well, based on the understanding relayed, based on the information relayed. Have a good one, and it's way too calm.